Welcome to the Newsmakers Podcast. I'm Billy Hollowell, and this is a show where we go behind the headlines every day to bring you an interview with a pastor, entertainer, politician, or other notable news figure. And this is a show, again, it's daily, but it's based on our weekly TV show, which is also called Newsmakers. You can watch it on the CBN News channel and also on our YouTube page. And on this show, every day, we dive deep. It's a little more longer form with one of the people who you will often see on our Newsmakers show or across the CBN News platforms. On today's Newsmakers, we're talking about the wild and storied history of federal income tax. It might seem like a dry topic, but we all pay federal income tax. Where did it come from? How did we get here? We are going to have William Federer here in just a minute. He's a historian. He's going to break it all down, the history of the federal income tax, and so much more. With no further ado, here is William Federer. Well, today we are talking about a topic everybody loves, income tax and taxes in general. It's a topic that is on people's minds, obviously, this time of year for obvious reasons in April. April 15th, usually in the middle of the month, this is the time when taxes, if you haven't filed them yet, you're rushing to do that because the deadline is here. But this issue of the income tax, you have covered this, you've written on it, you've written on so many fascinating topics. There's an interesting history here. When did the income tax that we now know so well, since all of us pay it, when did the federal income tax begin?
Right. Well, the U.S. Constitution forbade a federal income tax. It says no direct taxation shall be laid. How did the federal government get its money? Through excise taxes on specific things like salty, tobacco, alcohol, and tariff taxes on imports. And so Alexander Hamilton started the Coast Guard with revenue cutters. The revenue was the revenue for the federal government, and they would catch boats trying to smuggle things into America without paying the import tariff tax, or called customs. And the problem was the taxes that helped the North hurt the South. So Industrial Revolution, Britain, James Watt, right, developed a steam pump to get water out of coal mines, and it turned into steam engines, and it turned into factories, and they could make cloth with these looms called spinning jennies. And so where you, instead of doing a loom with a thread from sheep's fur, you could buy bolts of cloth real cheap. And so England was producing this. They were buying their cotton from the South. And the North in America, we were just getting factories going. But our stuff was more expensive. So tariff taxes made the European goods and the English goods more expensive. And so the people would buy the American-made goods, which helped the Northern factories. But the problem was the South didn't have factories. And so now the South had to buy more expensive stuff from Europe because of these tariffs, or more expensive stuff from the Northern factories. This turned into tensions that led into the Civil War. Now, the South's economy, agricultural, was based on slavery, unfortunately. So in 1832, South Carolina threatened to stop collecting tariffs. Finally, in 1861, Fort Sumter at Charleston, South Carolina, was the Union fort, making sure they were collecting tariffs. Well, that's when the Confederates fired upon it and started the Civil War. After the Civil War, the North passed lots of tariff taxes. It helped the factories get very large, and we did see the fastest rise in the standard of living in world history, with, again, women not having to sit at a spinning wheel. They could buy these bolts of cloth, and they manufactured farming equipment and rifles and just about everything you could think of really cheaply. So we had this rise of living. But at the same time, it accumulated money into the hands of the factory owners, who are now called industrialists, and they nicknamed robber barons, and they become very wealthy. And at the same time, you had Karl Marx, 1867, published his Das Kapital book, and he came up with this concept of how to overthrow the ruling elites in Europe by breaking a country into groups called critical race theory or critical theory, and then pitting the groups against each other to create riots. And then in the riots, you could overthrow the ruling class and set up a socialist dictatorship. Now, he thought that socialism would be this utopia. It would once you overthrew the ruling class, you'd magically have a brand new, wonderful society. The only problem is, in reality, it turned out to gangs. But this German Marxist thought came with German immigrants into America after the Civil War. So, flood of German immigrants into America, and they brought with them this concept of overthrowing the ruling class. And so they began to push for taking money away from the wealthy, and it was called an income tax. And now, is it okay, Billy? I'm just sort of going through this history. I put together a book called Interesting History of Income Tax.
Yes, you have your book, and I want to ask you, I always love interviewing you because you take us through chronologically. There's one thing I wanted to ask, this revenue tax that happened during the Civil War, the Union during the Civil War implemented this. Was that the first time that we know of in America where there was an income tax essentially of some sort?
Right, that was the first time there was a federal income tax. So once the Civil War started, with the Confederates firing at Fort Sumter, South Carolina, secedes, guess what? There's no federal money coming in, right? And prior to the Civil War, 90% of the federal government was financed through tariff taxes, mostly collected at southern ports. And so when the South seceded, there were no more tariff income coming in, and the federal government was like, where do we get our money? That's when Lincoln pushed through an emergency income tax. And it was raised $750 million to finance the war. After the Civil War was over, there was no emergency. And so the income tax was repealed. So yes, there was no federal income tax until the Civil War. And after the war, it was repealed. So no income tax again up until 1892. And if you want, I can pick up with that.
Yeah, go ahead and pick up with that, because I know there's a Supreme Court case that follows, and then it is wild to me, and I think people might find this shocking who don't know, and then I'll let you kind of walk us through. But the fact that you get into the 1900s, people would assume these income taxes have been with us federally since the beginning. Clearly, they have not been, and it's shocking how recent it is. I just want to say that before we sort of go into it. But go ahead and take us from 1892 down the line.
Right. So, the Marxists thought, Lenin even said, the way to crush the bourgeoisie, which is the business owners or the ruling class, the way to crush the bourgeoisie is through taxes and inflation. So if you print lots of currency, everything you've saved up purchases less. And so this will cause people to basically, you have to turn to the state and say, help. And the state says, we'll take care of everybody, but we'll now own you. And so that's a backdoor into socialism. But he said income taxes. So as the German immigrants began to come to America, bringing their Marxist thought of taking money away from the wealthy, they pushed for an income tax. So in 1892, you had the first income tax during a peacetime, and worked its way through the Supreme Court. And the Supreme Court declared it unconstitutional in the case of Pollock versus Farmers Loan and Trust, 1894. The Chief Justice is Melville Fuller, and he says the original expectation was the power of a direct taxation would be exercised only in extraordinary exigencies or extraordinary emergencies like a civil war. And since there was no war, he didn't see a reason for an income tax. And then another Supreme Court justice in Pollock versus Farmers Loan and Trust is Stephen Field. And he said the income tax law under consideration is class legislation. And that concept of class is this Marxist European idea. Whenever a distinction is made in the burdens a law imposes or in the benefit it confers on any citizen by reason of their birth, wealth, or religion, it is class legislation and leads inevitably to oppression and abuses. So no income tax after 1894. The Supreme Court said it's unconstitutional. But this thought of taking money from the rich became entrenched. And so Teddy Roosevelt pushes through the inheritance tax because only the extreme wealthy had an inheritance worth leaving. And then another was William Howard Taft. He pushes through a 2% corporate income tax because only the extreme wealthy had owned corporate stock. So again, we're just going after that extreme wealthy. Finally, Woodrow Wilson becomes the president, and he had this thought that tariff taxes between countries caused wars. Right? One country didn't like the fact the other country was putting a tariff on their goods. And so Woodrow Wilson thought if we could get rid of all tariff taxes, there would be world peace.
That hasn't gone so well, it seems.
And so Woodrow Wilson pushes through the 16th Amendment in 1913, and it's a soak the rich tax. It's a 1% tax on the top 1% richest people in the country. We're talking Rockefeller, Carnegie, Astor, Getty, Vanderbilt, Fisk, Flagler, Gould, Harriman, Mellon, like the Chase Mellon, J.P. Morgan, and Schwab. I mean, today that would be a tax only going after Bill Gates, George Soros, Mark Zuckerberg, Larry Fink, and Jeff Bezos. It's like, who wouldn't want to tax them? Sure, tax them, all right? This is an interesting observation. And I put this in my book called There Really Is an Income Tax. The wealthy aren't wealthy because they're stupid. They're wealthy because they're smart. And so no sooner did income tax get passed than the wealthy started tax-free foundations. Rockefeller Foundation, Carnegie Foundation. This way they could still control all their money. They just weren't taxed on it because it was in these tax-free foundations. And so the tax-free category used to only be for churches. Why? Because the churches did all the social work. So churches started hospitals. 8 of the 10 largest hospital corporations in America were started by churches, mostly Catholic churches, and then Baptist, Presbyterian, Methodist, Seventh-day Adventist, right? But it was churches. Churches started medical clinics, schools, orphanages, homeless shelters, soup kitchens, benevolence, inspected bottled milk, because they would get in the contamination. And they cared for widows, unwed mothers, war veterans, maimed, juvenile delinquents, immigrants. They visited the shut-ins and the prisoners. The churches did all the social work, and they did it for free because they were doing it for a religious motivation. Now, that all changed during the Great Depression and Roosevelt's New Deal programs, and especially during Lyndon Johnson's Great Society welfare state. So the government usurped the church's role, and the church let it take over the role. And the dynamic changed because instead of churches doing stuff for free, the government would want to get involved with money. And then you got the government getting people dependent on the free stuff. And then they'll vote for candidates that want to continue the free stuff. And you get this politics involved. And basically, the welfare state is you intentionally get as many people out of work as on purpose, get them to sign up for welfare on purpose. And then they'll vote for candidates that promise to continue the welfare. So it's a way to build a voter base. Again, prior to that, you had churches taking care of the poor for free. They even had a term for it that was disinterested benevolence. So you're doing stuff without any concept of getting something in return, not a vote, not so. So anyway, back to this concept. Gerald Ford said in 1974, "What they don't tell us when they propose all these benefits that they're going to give us from the federal government is that the government big enough to give us everything we want is big enough to take away everything we have." So now you have the federal government growing bigger and bigger that nobody ever imagined would happen. Now, the churches, they got tax benefits. Number one, because the church is just a gathering of individuals who had already paid their income tax. So you got people who paid their income tax gathering together. Why should they have to pay income tax a second time? Besides, they're going to use it to just take care of all these social needs. But one other very important but often overlooked benefit of churches is they maintained strong marriages and families. This encouraged a moral population, which translated into safe neighborhoods. During the 1930s up through the 1970s, 70% of Americans regularly attended church. right? Even in 1965, 93% of Americans identified themselves as Christian. So we had a Judeo-Christian populace, everybody's going to church, strong marriages, strong homes, less crime. Well, guess what? You get rid of a religious society, and there's more broken marriages, which means more fatherless children, which means more crime, more gangs, more drug abuse, and more homelessness, and declining property values, which means you have a declining tax base requiring the tax rates to be raised to hire more police to take care of the crime and more fires. So there is a big financial benefit or loss when the church stops becoming an influence in society. So the church declines its influence. There's more crime and taxes have to go up to cover all these new expenses of homelessness and welfare.
I wanted to ask something because it's interesting, the war nature of the federal income tax. When there's a crisis, how it was sort of initially intended to be. There's a crisis, Lincoln puts the tax into effect. It's rescinded in 1943. I know there's paycheck withholding that begins again, but it's an emergency effort to finance World War II. When did it shift? And you're talking about that right now. And it's interesting, the connection between families, people not going to church, disconnecting from the eternal, right, from a baseline, and you're watching culture even real right now from that. You have all these other social issues that come out of. Would you say a lot of the financial issues, a lot of the problems that we're having culturally because of some of these societal issues, that a lot of that goes back, even though we're talking about income tax here, a lot of that actually does go back to that disconnection from the moral Judeo-Christian values that were once holding the country together?
Exactly. So we see this, sort of like ancient Israel. They had a republic for 400 years, and then the priests stopped teaching the law, and you had Levites with silver graven image, and then Eli's own sons are sleeping with women in the tent of meeting where the Ark of the Covenant was, and then another Levite with a concubine, she gets raped to death, and you read this line, every man did that which was right in their own eyes. Why? Because the priest stopped teaching them what was right in the Lord's eyes. It turns into this chaos. They all go to Samuel the prophet. They say, we want to be like the other countries. We want a king. And so they transition from a republic to basically a monarchy. And so what happens is this idea of, if there's a crisis, people surrender their freedoms to somebody that's going to restore order, that socialism gets involved. And they want to do this critical theory where you categorize countries into groups of victims and oppressors, haves and have-nots, and you pit them against each other intentionally to create crises so that everybody panics and says, government, please come in with strong authority to restore order. And in the process, you've transitioned from a republic bottom up to a dictatorship top down. But it happens during emergencies. So emergency of the Civil War, Lincoln concentrates power, even suspends habeas corpus, where he arrested the entire Maryland legislature because he didn't want them to vote to secede. But he pushes through this income tax. Now, he did get rid of slavery. That's good, right? So we want to give credit where credit's due. But this pattern during World War I, Woodrow Wilson, he pushes through this income tax, right? The 16th Amendment. And the war starts and everybody's like, okay, it's an emergency, World War I, we'll pay it. After the war, it's reduced, but it's not eliminated. And then you have World War II and FDR, and he has the greatest income tax expansion in American history. Instead of it being the top 1% richest people, now it's everybody. And even a quote from John F. Kennedy acknowledges this. In 1961, Kennedy said, in meeting the demands of war finance, the individual income tax moved from a selective tax imposed on the wealthy to the means by which the great majority of our citizens participate in paying. And it was part of the patriotic fervor, right? Uncle Sam needs you, buy war bonds, and they'd have billboards that would say, smash the Axis, pay your taxes. The Axis being the Nazis and Imperial Japan and Mussolini's Italy. And now, you mentioned withholding. Taxes, for the most part, were brand new for people. They never paid the income taxes before, and you were supposed to save it up and pay at the end of the year. Well, most people made $5,000 a year, and they had expenses. They just came through the Great Depression. They didn't save up money. And so Beardsley Rummel who was the chairman of Macy's department store, who became the director of the New York Federal Reserve. He came up with this brilliant idea of withholding a little bit of the taxes from people's paychecks every month. And so at the end of the year, they'll have paid their income tax. Kennedy writes, he goes, withholding on wages and salaries was introduced during the war, World War II, when the income tax was extended to millions of new taxpayers. So whenever you look at your paycheck and you see all this money that's been withheld, that was an emergency effort pushed through during World War II that stayed. So that's when you always have to watch out when the government's, oh, it's an emergency. We got to take a little away your freedom. Well, they'll never give it back.
And here we are. I mean, it's fascinating decades later, and people complain about this all the time. You'll hear people look at their paycheck. I can't believe how much is going out. You've obviously got Medicare, Social Security, then you've got the federal income tax, you've got your states. In some local areas, you're paying local taxes, right? New York City has a tax. And so it becomes very interesting to see that you have this whole history, and I think most people don't know this history, of these war emergencies that then expanded into something, as you said, that never went away. And one last question for you. Why do you think, and I think you hinted at it before with the, patriotic sort of fervency that was going on, why do you think more people, while this was happening, didn't speak up and say absolutely not, or when it stayed, didn't raise their voices enough to force the government's hand to rescind some of it?
Yeah, well, one of the people that started the conservative movement was Eddie Rickenbacker. Now, you may have known that name because he's the World War I fighting ace, right? Fighting the flying circus. And he'd have those planes, and he had the 94th Aero Squadron, and they'd shoot down, and the Baron, the Red Baron, all that. And then, so after the war, he pioneered the conservative movement. And he says, when Woodrow Wilson told us the evils of concentrated power, less than 9% of our entire national income was enough to keep the federal government going. By 1960, though, taxes took 1/3 of our earnings. And he goes on to say the federal government piles up more power in Washington at the expense of individuals across the land. Now, one other phenomenon, the same way that the wealthy aren't wealthy because they're stupid, they are smart, that when income tax was implemented, they started tax-free foundations. Well, when FDR increased the income taxes so much, well, the wealthy did what? They decided to move their factories overseas. So we were rebuilding Germany and Japan after World War II. It's called the Marshall Plan. And we're going to have new equipment, and these industrialists are like, hey, we can build factories over in other countries. Excuse me, got a little cough there. And we can then use these cheaper goods, bring them back into America, and then bribe the politicians to lower the tariffs so we can bring our stuff in cheaper. And so when these industrialists went overseas, they became globalists. And what left with their factories? Their patriotism. Now they're loyal to the bottom line financially. And now we're facing these globalist people. I mentioned the Soros and the Klaus Schwab and the Larry Fink and all these, and they don't see any attachment to America. They look at the bottom line globally. And so Kennedy mentioned, and I quote him because he was a Democrat, but Ronald Reagan adopted his views. Kennedy said in 1961, countries where income taxes are lower than in the United States provides a tax advantage for companies operating through overseas subsidiaries that is not available to companies operating solely in the United States. Kennedy said, present tax laws may be stimulating an undue amount of flow of American capital to industrial countries abroad. So you squeeze the sponge, the water goes out. You raise the taxes, and the factories are going to move overseas. How do you remedy it? Well, lower the taxes, make it financially more beneficial to have your company located here than there. And so Kennedy said, 1963, a tax cut means higher family income, higher business profits, and a balanced federal budget. Every taxpayer and his family will have more money left over for a new car, a new home, new convenience, education. Every businessman can keep a higher percentage of his profits in his cash register and expand or improve his business. And so this idea is hey, let's cut everybody's taxes. You'll have more money, you'll spend it and buy stuff. And the factories will have to hire more workers to increase the increased demand for more products. And so it'll be a win-win. And then the government will have more income tax revenue because everybody will be making more money. It gets more and more complicated. And I saw a quote from Einstein, Albert Einstein, and he was talking to his accountant, Leo Mattersdorf, who wrote a Time magazine article in 1963. And Leo Mattersdorf said, one year while I was at Princeton preparing Einstein's tax returns, he says, Mrs. Einstein asked me to stay for lunch. During the course of the meal, Professor Einstein turned to me and with his inimitable chuckle said, the hardest thing in the world to understand is income taxes.
This brilliant man.
And Ronald Reagan, 1988, said, I believe God did give mankind unlimited gifts to invent, produce, and create. And for that reason, it would be wrong for government to devise a tax structure that would suppress those gifts. So a lot to think about. A lot to think about
at tax time and in an election year. These are big issues. And I think, solving the issues, that's complicated, but you have to understand the history before you solve the issues. And so I appreciate you coming on and breaking down that history for us. Where can people go to grab your book on the matter?
Well, thank you, Billy. My website is AmericanMinute.com, AmericanMinute.com. And the title of the book is The Interesting History of Income Taxes.
Well, very good. Grab that book, The Interesting History of Income Taxes, and we will see you again. We always love having you on very, very soon.
Oh, thank you.
That's all for today's Newsmakers podcast. Be sure to tune in for the next episode of the show, and also head over to the CBN News YouTube channel and the CBN News channel to watch Newsmakers every week. We'll see you soon.